Hello students, welcome to week 5 for PRL 320. This week we are focusing on money and capital markets that will provide you with some interesting information and a good overview of what this means and how this information pertains to working in public relations and with business owners. Our week 5 agenda tells us that we're reading chapter 6. We're working on a discussion board that has an original post due date of Friday with your replies due on Sunday, as well as assignment number 5. Discussion number 5 asks you to write a 400-word post that explains what you learned about money markets and capital markets from this week's reading as well as this lecture. Once you've written that post, you'll need to go through, you'll post it by Friday, and you'll go through and put 2 replies to do 2 different course mates no later than Sunday. Additionally, assignment number 5 asks you to explain what you learned about money capital markets by answering the following 3 prompts. So you'll take your discussion post to the next level. It's a 1-page essay, so we're asking you just to expand on what was written a little further, and particularly answering these questions related to money capital markets. For example, you'll answer the question, what are they? You'll answer, how do capital markets relate to concepts about public relations? You'll answer concepts around provide a general overview and reflection of how it relates to your knowledge as well as a PR practitioner. So do keep that in mind. So what I'm looking for in this essay is for you to clearly tell me how this idea and relates to your knowledge as a PR practitioner by providing a general overview and reflection of it, and how capital markets relate to concepts related to public relations. Particularly in something like this, you should be thinking about the budget aspect of a campaign and how that influences that as well as the communicative efforts that are related to this concept in public relations. What should we be communicating about these avenues of financing, and how do they relate to what our brand says about us and things of that nature from more of a strategic perspective. Money markets are often used for short-time financing, typically when corporations need to get through seasonal business cycles or for other purposes. They often turn to a money market. A good definition of money market typically tells us that it's a market in which large borrowers raise short-term money by selling various debt instruments. That is, it is a new issues market for short-term securities. The money market is also a secondary market in which securities once issued are actively traded. Money markets are then are institutions and trading channels through which short-term debt instruments are originated and distributed. In the U.S., they consist of 4 different things. The first thing that they consist of, a money market is a CD, which is a certificate of deposit. They're time deposits with specific maturity and interest rate issued by banks and marketable through a secondary market of brokers. The second one is commercial paper. It's unsecured IOUs sold at discounts for face-to-face value. The next one are T-bills. They're U.S. Treasury bills that are negotiable debt securities within maturities of 1 year or less. It's typically sold at discounts to face value. And then discontinued notes are the 4th thing. Notes issued by Federal Home Loan banks and other government agencies. These financial instruments have 2 things in common. They're highly liquid, meaning they can easily be sold to other investors for cash, and they represent very low risk credit to investors. A corporation, for example, which has more cash than it needs for a month or more, can safely invest in these instruments with the expectation that it will get its money back plus receive a decent amount of interest. If they determine that they cannot hold on to these instruments until they mature, then the company's treasurer can sell them in secondary markets. And on the other side, the same transaction, some other entity is using the money market to sell its short-term IOU with the goal of obtaining some type of capital. In truth, money markets are nowhere in particular. It's a worldwide network of dealers, mostly money-centered banks located in the majority of the Western financial centers that buy and sell for their own accounts. So it's very important to keep that in mind. A capital market describes the markets in which long-term debt instruments, for example, bonds and equity securities, meaning shares of stocks, include private placements and are issued and traded. Like the money market, capital markets include primary and secondary components. The primary market consists of security dealers and financial institutions that issue newly minted securities to the investing public. The secondary market includes both primary market dealers plus a network of over-the-counter dealers like NASDAQ and such, and organized security exchanges such as the New York Stock Exchange and Tokyo Stock Exchange. The secondary market provides opportunities for the buying and selling of securities after their initial issuance. There are some common stock noted within capital market securities. So now that we've kind of we have a general understanding of how capital markets work, let's consider the basic types of securities that corporations issue to the investing public to raise capital. So what a company will typically do is they will issue and provide basic types of securities that can be invested by the public to raise capital in actual cash for their operations and expansion. There are three things that you should know that are common stock. There are three things that you should know are common stock, preferred stock, and bonds. So particularly common stock is the class in which you generally think whenever stocks are discussed. These includes voting rights, dividends, residual incomes. Preferred stock is a form of stock that, not unlike a bond, pays a special dividend. Further, preferred shareholders stand in line ahead of common shareholders with respect to any payment of dividends and any distribution of assets and liquidation. Bonds is a capital market debt security. The traditional bonds have a feature of a face value of usually of $1,000 or multiples thereof, as well as a maturity date on which the issuer must repay or redeem the bond at its face value. They also have an annual fixed interest rate, usually payable at 6-month intervals via coupons or direct payment to the bondholder. In summing up, it's important to know that the money market is the financing source to which they turn to when companies need short-term debt funding. In the U.S., debt instruments originated and distributed via the money market are CDs, corporate commercial paper, U.S. T-bills, and discounted notes of Federal Home Loan Bank and other government agencies. Capital markets are those in which long-term debt, bonds, and equity securities, shares of stocks, are issued and traded. So it's important to know that as we look at some of these things, the money and capital markets are playing the field in very different ways that make different needs met for various companies. So as you work as a PR practitioner, it's important to keep some of these things in mind. When you're looking at the strategic perspective or the strategic communication perspective of common stocks and things of that nature, bonds and stuff, and things related to that, it's important to consider what are you communicating to your shareholders? What are the communication factors of that particular audience group to the company and things that you need to keep in mind? Understanding how capital markets work and money markets work are very important, and being able to communicate effectively with those that are investing in the company. So oftentimes in public relations, particularly in this program, we focus on things like brand awareness, restoring our reputation and name to the general public, or those that we typically sell or we sell our product to, or our consumers. We focus heavily on consumer relations. What this particular class helps us is we are learning business. We are becoming literate in business terms and financing and things of that nature, so we can improve our relations with investors or financial relations. So keep that in mind as you're working on your assignments this week. Just to recap, we're reading Chapter 6 in the Week 5 agenda, as well as completing discussion board number 5 and assignment number 5. If you have any questions, let me know. I look forward to interacting with you this week and pray you all have a blessed week.